Welcome back once again. I hope you are enjoying the course and not getting bored. You see, the subject of cognitive bias may not be very interesting. Nevertheless, it is very important from the psychology point of view and from understanding the behavioral finance point of view. I have tried to make it a little interesting, and I am also open to your suggestions as to how to make it more interesting. Now, the next cognitive bias that we are going to talk about is called mental accounting. What is it? Mental accounting is something when you treat money differently based on its source or the intended use. Now, this again is a very common bias, and most of us have it. You and me may be having it, though we may not be aware about it. Now, you see, if the money belongs to me, then I spend it very carefully. But if it belongs to others, then I just don't care. If I am paying for my own travel, then I will go by public transport. But if my company is paying, then I will go by a taxi or maybe by a flight if it is available. If I have to pay for my own lunch, then I will eat little and only the budget items. But if the lunch is on the house, then I may literally hog and take the most expensive dishes. Now you see, we are not doing all this intentionally. Nobody wants to do this intentionally. It is this cognitive bias of mental accounting which has creeped into our brain, which is causing us to do all this. You see, when people go on a foreign country vacation or a holiday, then we keep converting the price of everything in our local currency. Most of us do it. I also do it. If we find that it is costing less than what it is costing in our own country, then we will buy it, even if we don't need it. But if it is costing more in our own currency, then we will not buy it even if we desperately need it. I have seen people who may not buy even water in the United States because the drinking water bottle may cost $5 over there, which is equivalent to about 400 rupees. And in India, that same bottle will cost 20 rupees. So when you compare, you are hesitant to buy even a bottle of drinking water. That is mental accounting. Now, we may not accept it, but if I am a financial consultant or if I am a fund manager, then this bias is not good for my profession. If I am handling other people's money and if I have this bias present in me, then I will most likely destroy their money. Got the point? The next cognitive bias that we talk about is the endowment effect. What is it? It is, overvaluing things simply because you own them. Now, if it is my house, it is costing 2 million. That is what is there in my mind. But if it is your house in the same neighborhood, then it is worth only 1.7 million. Both may be identical houses, but the one belonging to me, I feel it is worth 2 million. The one which belongs to you, I feel it is only 1.7 million. Got it? And if I am selling my 5-year-old used car, then it is worth $10,000. I expect $10,000 from it. But if I'm buying a 5-year-old used car, then it is worth only 6,000 because it is not very well maintained. It belonged to somebody else. It is not well maintained. It is worth less than my own car. Now, what is the implication of this bias on finances? How does it harm us? You see, people suffering from this bias will never be able to value things correctly. They will never be able to value things in its correct perspective. people who have this bias will keep holding on to underperforming assets just because it belongs to them. If you have a house, your ancestral property, which is depleted, it is just having the value of the piece of land. On the contrary, to bring down that house or to demolish that house, one may have to incur expenditure. But because it belongs to you, it is a very valuable property. You would not want to sell it at the market price of the land. You will keep holding on to that property. You or me, whoever, I'm just using, like in the general language, I say you, but it could be me also. Now, people who have this endowment bias, they will never be able to invest in assets like stock or gold or real estate because they will always find it very costly. A stock which was $10 2 years back was very costly at that time. Today it has become $15. Again, they find it very costly. Next year it will become $30. Again, they will find it very costly. They'll never be able to purchase it. Now, if you are reluctant to invest your money, if you are keen on keeping your money at your home or in your fixed deposits, if you are doing that, then just pause for a moment and think over. Are you suffering from this endowment bias? Is it because of this bias that you are not purchasing any assets? You are just keeping your money at your home or in your fixed deposit. And if you are a financial consultant or a financial advisor, and if your clients refuse to accept any investment advice from you, they are not willing to, purchase any investment plan, then again pause over and think whether your clients are suffering from this endowment effect. And if they are, then you may have to use all your knowledge of behavioral finance and try to convince them by understanding their psyche. Got the point? So I hope you are enjoying these. A last one that we see now is the availability bias. Alright, what is this availability bias? It is relying on immediate availability of information rather than doing a research before investment. Now, if I want to buy a house, rather than doing the market research, I just ask the broker or I ask anyone who has recently purchased a house in that area. That is the availability bias. The moment I get information readily available, I rely on it. I don't do the hard work of conducting some research. If I want to invest in stock, then instead of studying the financial statement, which is quite laborious and it takes time, I just look at the business TV headlines, and whatever the headlines say, I invest in those stocks. I means not me actually, I'm just giving it as an example. Alright, so if we have such tendencies, then probably we are suffering from this availability bias. And if I'm buying a complex gadget or a machine or some equipment, then instead of comparing the features, the characteristics or the performance data of that equipment, I just compare the price, because the first thing that is available is the price of the two equipment which I may be comparing. So I just look at the price instead of looking at its features. Got it? This is how the cognitive bias affects our financial decision making. But the $1,000,000 question is how to manage or how to guard against these biases, especially during your financial decision making. I am not talking here about your other routine life, but especially while taking financial decisions, how do you guard against all these cognitive biases that we have discussed? See, the first thing is to enhance your knowledge. Keep learning and then believe in your knowledge. Then seek professional advice where it is required. You may not be knowledgeable on everything. If you don't have specialized knowledge on a particular thing, don't be hesitant to seek professional advice. And the second thing is pause before taking any financial decision. Don't be in a hurry to take a financial decision. Nothing is running away. And think for a moment. Are you knowledgeable on this? Am I knowledgeable on what I am doing? If I am knowledgeable, then am I using my knowledge, or am I just relying on my emotions or tips? Am I really making true use of my knowledge? And then, have I considered the facts and figures properly? Or am I in a hurry and I'm inflicted, or rather, I am, getting swayed away by the bias present in me? Have I considered all the facts and figures properly or not? And the third thing that you must do to avoid these biases is that in all financial matters, when you're dealing in finances, try to use data driven tools. Try to use some Excel sheets, some checklists, some automated decision making, some algorithms where possible. Because automated decisions and algorithms, they will not let your emotions influence the decision. Once you have set that, these are the parameters which I want to confirm before I go ahead with the decision, then prepare an algorithm or a automated decision making tool. Don't rely on your emotions or your cognitive bias. So I hope whatever we have studied so far was interesting and it makes sense to you and me, of course. And if there are any suggestions, if you want to, give me some suggestions as to how to improve this further, I am always welcome to receive your suggestions. Thank you so much.